Hello, I'm Christina Nicolaides. Welcome to In the Money, Bank Dubai's weekly discussion programme, where we take a closer look at the important economic events that impact the financial markets. This week, we're going to be focusing on the all-important monthly non-farm payrolls report. Non-farm payrolls measures job creation in the US and are probably the most hotly anticipated events of the economic calendar. NFP figures are normally released on the first Friday of the month and have a big impact on the US monetary policy decisions and therefore the tradable value of the dollar in currency markets. But just how important is the NFP? Historically, it's regarded as the biggest trading event of the month, although some analysts believe the impact of the non-farm payrolls is actually declining. Let's put this question to Lauren Carmouche, Senior Investment Analyst at Bank Dubai. Lauren, tell us what you think. How important is the NFP to binary options investors?
The NFP is a major event, especially in the currency markets for binary options traders. It's employment data or level of new employment within the US, which is a major economic indicator. It's a major indicator of economic health in that economy. It's information that comes out of the US. And so that has a major impact in all global markets. It affects all the major currency pairs as a result. So it's a big event. It's also a metric that is used by central banks or monetary policy makers to assess how the economy is doing and to provide a framework for future monetary policy. We can have some indication of how interest rates may follow as a result of this particular data release. Unemployment is used as a major metric for central banks to analyse economic health. So it is a major mover in the markets. If we use an example, quantitative easing or the tapering that's been taking place in the US by the Federal Reserve, they have used the NFP or unemployment data as a measure of how quickly they should taper or how fast the pace of scaling back of quantitative easing. And so we can make some predictions about where the market may go from there with regards to results from the NFP and their multiplier or knock-on effect to other major macroeconomic indicators as well. So it's not just the event itself, which is a large impact, but it's the impact that it has on how we view the future or the economic horizon.
Several big-name analysts claim that it's salaries, not employment figures, that really demonstrate economic health. What's your opinion on this, Lauren?
I think with salaries or wages, they are important, but they're not the full story. Wages or salaries bridge the gap between the labour market and inflation. We have seen a reduction in the employment rate, or unemployment rate, I should say, over the last 12 months. But we haven't seen the same impact on wage inflation. We haven't seen wages go up. In fact, over the last 12 months, if we adjust for inflation or we account for inflation, wages have only increased by 0.5%. So there is some slack there within the economy. Now, wage inflation is a result of supply and demand. Now, employers are only going to raise wages when they struggle to find qualified staff. At the moment, unemployment is fairly high, so there's a lot of choice out there. So we're only going to see an increase in wages when we see some sort of decision from the central bank, like an increase in interest rates. We're only going to see that if we see employment improving. The key point, I think, is that the central banks use unemployment rates as their metric for measuring how the economy is doing. Wages will tend to follow any interest rate decisions from central banks, so we wouldn't expect to see a real impact on wage inflation on the markets. Wage inflation will probably be a less visible impact on the markets by kind of a diffuse effect, whereas unemployment rates or data on unemployment is higher impact. So if we're looking at it from a trading perspective, we'd be far better focusing on unemployment, not first because the Fed looks at that as a major metric, but also because we are able to trade a higher impact event.
So overall, would you say that binary options investors should still be looking at employment data from the US as a prime mover of the euro dollar? And is the NFP still the one to watch?
Yes, I would say the NFP is still the one to watch. It's one of the most popular events within the markets. You see a lot of people coming to trade that event. So there's a lot going on. There's a lot of volatility and a lot of up and downs within the markets. So they present a lot of good tradable opportunities. Not just within the euro dollar, as you mentioned, but also other assets, other currency pairs, and also gold as well as a correlated asset. If we use an example, yesterday we had unemployment data released from the US, which suggested that there was fewer people claiming unemployment benefits, and the result of that was positive for the US. So we saw a drop in gold prices. It represents a lot of opportunities within the markets, and I would say these big events are the best ones to trade, especially for binary options traders.
Thank you, Lauren. I'm Christina Nicolaides, and this has been In the Money with Lauren Carmouche, Senior Investment Analyst at Bank de Binary. Don't forget to contact your account manager about this week's investment opportunities. Here's wishing you all a very successful week on the markets. So until next time, goodbye.